Let's talk about something that's a bit tough, but really important. If something were to happen to you tomorrow, would your family be financially protected or would they be financially overwhelmed? It's a question many of us avoid, but in Canada, many families don't realize what actually happens when someone passes away without life insurance. The truth is, when someone dies without this protection, the financial impact often falls directly on the family left behind, creating a ripple effect of stress and hardship during an already devastating time. First, let's look at the immediate expenses. Funeral and burial costs aren't small. They can easily climb into the thousands of dollars. These bills usually need to be paid quickly, and without a plan, that money has to come from somewhere, often savings or even credit. It's an immediate financial burden right at the beginning of the grieving process. Next, and this is a big one, is the loss of income. If the person who passed away was contributing to the household financially, that income stream stops overnight. Suddenly, the money for the rent or mortgage, the groceries, the car payments, and childcare is gone. But the bills don't stop. The surviving family members are left to figure out how to cover all these ongoing expenses on a reduced income, which can be incredibly stressful. Then you have to consider outstanding debt. People often assume debt just disappears, but that's not always the case. While some debts might be settled through the person's estate, things like joint debts, mortgages, or co-sign loans can directly affect the surviving family members. Imagine grieving a loved one while also being pursued by creditors for debts you now have to shoulder alone. It's a heavy weight to carry. Beyond the immediate crisis, there's the long-term financial stability to think about. Without that financial cushion that life insurance provides, families might be forced into making major life-altering decisions. This could mean selling the family home, a place filled with memories. It could mean a surviving spouse has to take on a second or third job just to make ends meet. It might mean delaying or giving up on important long-term goals like sending kids to university or saving for retirement. The dreams you built together could suddenly feel out of reach. This is where life insurance comes in. It's designed to create a financial safety net, giving your family the space and time they need to grieve and adjust without immediate financial pressure. It's not really for the person who passes away, it's a final act of love and protection for the people who depend on them. It ensures that your family's life can continue with as much stability as possible. If you want to understand how you can put this kind of financial protection in place for your own family and learn simple, practical ways Canadians can plan for the future, make sure you subscribe to this channel. I help people build stronger financial security. Check out the link in the description.